Good morning, everyone, and welcome to the European crossover webinar. And just said Eurozone money annual growth came in at 5.7%, a little bit higher than what was the Reuters poll. We don't have any economic data until into the U.S. session. We do have economic activity, Mexican economic activity. It's going to be 7 a.m. Eastern. And then we do have final GDP for the states at 8:30 Eastern, along with jobless claims, advanced goods. You see pending home index. That's going to be at 10 a.m. Eastern. And Kansas City Fed manufacturing at 11 a.m. Eastern. So yesterday we saw the euro come under quite a bit of pressure, and we saw a bit of a rebound here. I know I mentioned I did the basic technical analysis last evening. I don't know if I mentioned the 967. I know that I mentioned that before we got. Let's take a look here. Bear with me one moment. Well, that 966 is what, when they broke, that's essentially what has held this market, and then we'd turn around and roll back down. It doesn't seem as dramatic when you're looking on a 2-hour, but on a 30-minute, you see a much bigger difference, or I even say a 5-minute. But we're seeing the dollar try to make a move back up here. Later in the session, we're looking at 99.03, or I was, and we topped out at 99.05, and then looks like we're trying to reassault again. And we do have some options expirations that were option expiration at 10 a.m. Eastern time, but big strike or big value as far as the 110 strike, but it doesn't appear that cut off this squawk. It's getting annoying. Does not appear that they'll make a move back up there, and we're seeing the cable once again roll back a little bit further lower here. Dollar CAD just mired in this range. We'll go in and take a look at the cross rates. I turn this volume. The squawk is driving me nuts right now. This is not the time of the morning for me to be listening to that guy yak. So we are seeing the Euro Kiwi going and pull back a bit here. You can see that. Obviously, this Euro weakness now, a lot of people are looking for this pair to fall in. I don't know, I was about to say dramatically, but I don't know about dramatically, but they certainly were looking for a rather strong pullback on the backdrop of the RBNZ, and we simply didn't see that. But now with the weakness we've seen, pervasive weakness we've seen in Euro, is certainly, coming in quite strong here. Certainly not coming into our buy chart support from yesterday. And Guppy making a move also towards yesterday's buy chart support here. But we take out this low, I thought there'll be some pretty good, decent volume demand right there. A little bit lower, which is going to come in at 33.72. We're not too far away from it. And Aussie yen still hugging near its lows. Same here with the Euro yen, not to be expected, but coming into this bias chart support that we had in place. So we did see gold come off quite a bit, and we saw a little bit of rally. I talked about it in the daily wrap-up. This thing really came undone. I picked up some on the way down, and boy, it started to spin out of control. I was able to manage to get out of that thing okay. But we talked about it. I said, hey, look, this thing has the ability to go and move $5 or $6. And actually, I think at the time we were right here. So we did move up about $5 off of those lows. We actually made a return back to the scene of the crime, which is, you look at 950, which is where I was looking at when the market was falling apart. Initially, I think, well, I'll put it just right below this 50%, and then we really started coming apart. But that's where they went to. Okay, now I did mention, I go, hey, look, any rallies back up in here, and I'm talking at the spot because the futures are trading about a $7 premium. That shorts would look to go on and add on and flip the other way, but I thought that there was a good potential that we could still rally back $5 or $6, and they did, but they started to roll back a little bit further again. And equities rallied up here. We're talking about this 29.85. They slid off from that area. I mean, they beat out that 29.85 by a bit, and they rolled back. And crude oil may still visit that trend line. So just bear with me. Okay, it says confusion reigns as politics turns ugly. Confusion appears to have replaced determination, and markets trying to navigate the week's political minefield in the U.S. and Britain. Many investors are trying to stay focused on the trade war, even more prosaic economic numbers and earning predictions, but the impeachment proceedings against Trump's and a defeat for Johnson in Britain's highest court are still too murky to take positions. One concern yesterday was that Trump's political woes might see him double down on the tariff war with China by way of distraction. Boy, you know that. And per his United Nations speech on Thursday. But instead, he once again talked about the possibility of a trade deal on Wednesday. Same thing, really. More of a diversion. Bring up anything so you don't have to look at it. What's still obvious. Indicate China was buying U.S. agricultural produce and eased fears of tariffs against Japanese autos by insisting U.S.-Japanese trade consultations would be completed within 4 months. Overnight markets turned flat as traders grew suspicious of the metronome of trade signaling and wondering how impeachment will play out in Trump's re-election chances next year in Asia. Were mixed, with Shanghai ending 0.6% lower and Tokyo and Hong Kong still flat. I spent too much time on this. Yield curve between 3 months with 10 years remain negative by 20 basis points. Currency, the dollar continues to push higher against both developed and emerging markets. Sterling's interpretation of Johnson's next steps and prospects for either a no deal or a snap election, 1% weaker. Apart from Brexit, European markets to parse recession signals from Germany, but we'll be looking to policy differences within the ECB. Blah, blah, no news there. Okay, let's go move on. Dollar steady through trade deal optimism aids riskier currencies. Dollar consolidated on Thursday, staying near multi-week highs against most currencies. It's Trump, pump and works, said Matt Simpson. There are only major moves either. It's a slight boost to risk, but noted traders were also trying to assess the likely direction of Trump's impeachment probe opened by Democrats. The euro bounced from an overnight 2-week low, remained under 110, 959. Trump stoked hopes of a trade deal to reporters in New York. That helped the Australian dollar. Kiwi rose to 63.07. The greenback had first been sold when the House of Representatives Pelosi said was launching an impeachment inquiry. Some of the call released by the administration showed Trump pressed Zelensky to investigate former VP Biden, but did not show Trump threatening to withhold aid. The House could trigger a trial in the Senate on whether to remove Trump from office, though it's seen unlikely to succeed because Republicans control the Senate. Markets took these things off very quickly. On to the next thing. You got it. So you can see here, we've seen a pretty good run up here in the dollar index. When we look at it on a 5-minute and the sell-off in the euro. If you're with us on the FX Daily Roundup, this is the area that I thought that we would be able to get to. We actually exceeded it a bit, and we rolled back, and now we're going back above this on the cash. So on the basic technical analysis that was done last night, it says euro broke through support level of 966 on the backdrop of a strong dollar. The low for the move was 938. Key options are expiring on Thursday at 110. Resistance ahead of the 110 is going to be is the 990. Support is 920. But you can see here the importance of that 966. You see here that was a low on Monday, and then we rallied up, and then we fell back below that, and we rallied. That's what ran out of gas at 966. But the resistance we'll show here is going to come right there at 988. You can see that. But it certainly doesn't look like it's anywhere close. And 966 would only be 20 pips. I mean, maybe after the options expired, you could see a little bit of a relief rally. You could fly right through that. But the resistance at this point, if you look at the different touches, it's going to come right there at 990. 990. And it's not saving that leading zero in this slot. I don't have time. Just not the time to go and try and edit that. Let's go move into support. Well, support is these old lows of 926, and where we break from there, we'd have to take a look on a daily. And that's a good little volume support there right now. The next leg lower is 866, but I would venture right there at 892. 892. I don't think we'll see that today though, but it would be look here. Yeah, let's call it 889. 889. So for the support, we'll go with right there. And let's go move into cable. So it said cable continued to slide back, but has encountered some value support at 23.57, but now we're below that. Expect some potential short covering, but that's not emanating at this point. Additional support is 22.86 if we were to slide back in here. And but certainly, let's take a look here. Right there, 22.86. Um, and on the upside, right there, it's going to be 24.05. There's some, okay value right here, 23.24. Actually, I see a little bit of a bounce here. So let's go with, for right now, 23.18. 23.18. They've already made this run up here at this 23.83 right there. With the dollar off from that kind of resistance, I mean, it has the potential to move higher. We'll go with that. And it's actually where they ran out of gas too. It's just going to be around 23.83. But if you look at this, it's still bullish, but on a short term, we have to give it with the dollar moving higher. Point this out for a bearish tilt. And moving into the Aussie. It says Aussie continues to put up the good fight, defending 67.40. A break lower would allow a challenge of 66.71. Resistance remains 68.31. So 67.40 is still trying to hold that. And we kept that 67.34. We did actually allow for a little bit dip. So no change here on the Aussie. We'll move into the Kiwi. So it says Kiwi did not get the expected pop after the RBNZ. Key support is 62.55. We know that that's been key support for some time, even all the way. It's been the bias chart support even back to last Friday, and is likely to be tested with the first round of stops taking the pair to 62.08. Resistance is 63.24. Give a moment. Okay, let's go on in and take a look here at the dollar CAD. So you can see here, we're just stuck in this very, very tight range. I put no changes from the prior day's analysis as the dollar CAD is trapped in a range. And the analysis for the prior day that was on the basic technical on the site said the dollar CAD is testing the downside of its recent range. Support is 32.24. A break below 32 would open a challenge of 31 even, and bulls need a daily close above 33.36 to see further upside. You can see this more clearly on the 2-hour chart. And we were just stuck. I mean, it's just as quiet as can be. But even with a push higher, we really have to get above this 33.36 here on the dollar CAD to get a swing on the upside. So no change on that. And let's go move into the dollar peso. So we finally got above 1956, but let's go move into the 2-hour. It's a little bit clearer there. So it says the dollar peso finally woke up, piercing the 1960. You can see that here. But a daily close above this level is needed to send the pair on its way higher. Resistance will be 1972 with support at 1947. So we could, push above that and goose some stops, but really the resistance beyond that is going to be 72. But we need that daily close above 1960. So got 1972 on the upside. And we've actually given this a little bit higher benefit of the doubt, if you want to call it 47, thinking that any dips back, that they will try and go on a step in and defend this market here. But you can see we finally were able to go on and clear that 1960. There we go. The 1947 is coming in right there. And let's go move into the dollar yen. Okay, it says the dollar yen challenged a resistance level getting as high as 790. This pair will have a tough time moving higher, although the next level of resistance is 808. Initial support is 739, okay, and followed by 709. Let's look at the 2-hour chart. It's a little clear there. Bear with me. So we made a pretty good run up in here. You can see we made it up here. There we go. So it actually made up as high as right there, as high as I think it nipped. I thought 790, but it might have only been 789. But our level was 788. But you can see we've rotated back a bit. Not a whole lot, but we have rotated a bit. So it does say it got up as high as 789, but I mean 790, but it looks like my high might have been 789. I don't think it's 1 pip's going to make a difference. But it says the pair will have a tough time moving higher against the next level of resistance is 808. Initial support is 739, followed by 709. So that's if the wheels start to come off the caboose on the equities. So let's go with 739. And we'll go with this level here, which really is basically where they ran out of gas. I mean, I think they took it out by a pip. But anyway, that you can see clearly that 788's been in place for a little while. So and let's go move into the cash dollar index. This thing's been something else. Since the dollar index turned on the afterburners on Wednesday, rallying to 99.07. Hang on. Oh my God. This squawk is driving me nuts. The dollar index turned on the afterburner on Wednesday after rallying to 99.07. The pair may take a pause to refresh, but will find buyers at 98.58, then 98.30. Resistance is 99.33. And let's go and take a look at that. So, I turn this volume down. I don't know how this doggone squawk keeps coming right back up. I'm about perplexed. I got back to working out, and this week I've been hitting it hard, and boy, I am pooped as can be. So I'm a bit grouchy this morning, and having that squawk going is driving me bananas. But anyway, enough of that. So it's actually going to be 99.29 that we're looking at, 99.29. So let's go and mark that off. And support's going to be You know, I would have deferred back to this 58, but we've been holding up so strong. It's going to be this level right here is 98.74. We'll drop it just a bit lower than that. Let's go right there, 98.71. But boy, I tell you, it doesn't look like it wants to go down there. But if we remember, we talked about options expiration. Let's say that now that we've seen this euro so weak, well, maybe we see the opposite in kind of a I don't want to call it a give back, but sort of speak like that. So maybe we see the dollar pair back. Probably not likely, but if it did, then it to come in around 98.72. I don't even get the squawk. I've turned it all the way down. It's still going. Holy smokes! Hang on. So it's going to be 98.72. I'm just saying hello to one of the guys in the chat room that popped in. So 98.72 and 99.21, 99.29. Holy smokes, man. And it's going to be interesting. Keep your peepers on those options expirations at 10 a.m. Eastern. It's going to be interesting to see what kind of reaction we're going to get. Because now, let's go move on. Remember, we've got some big dollar amounts here with the euro at 110. And boy, look at that. Good luck trying to get that above 110. Kind of interesting how that plays out. But then again, at this point, do we see, once we hit the options expiration, do we now see a counter reaction? Is it just basically even up? But we shall see. It's very interesting. Boy, too, with some people under some big hurt, and maybe was pressuring the euro, because then if they were had sold those 110, where they're exposed for a move below that, they've been trying to support it. At this point now, might as well just go in and sell the bejesus out of this thing. So maybe once we get the 110, maybe we get Austrian expiration, maybe we get the market going and flip back the other direction. It's just something to keep an eye on. May end up playing out, especially since we're just continuing to drag lower here. Because even though I think the euro can move lower, I'm not thinking that after option expiration is going to continue to move lower. I'm thinking we could see a quick bounce back. That could be, I don't want to go overboard and say it'd be a strong one, because I'm certainly no believer in the euro. I gave up on that song and dance. I keep hearing people saying, oh, it can rally, it can rally. I mean, you got to send those people to the cuckoo farm. But anyway, but I'm thinking is maybe we get a counter reaction, and then people, sell into that counter reaction. But we shall see. So let's go and move into the cross rates. And let's go with the euro. The Kiwi yen. And we're getting just past this bias chart support, but this is a decent little level here. Decent, not bad. Doggone it. Oh, look at the one. Oh, what a morning. Holy smokes. That working out has really beat me up pretty good. Well, this held overall okay. I'll tell you what, we're going to go in and we're going to go in and keep this here for now. So it's going to be, we had, should have been 67.58. Yeah. And on the upside, we had 68.22. We're going to keep that the same here. The only thing is we'll move this just a bit lower here at 68.11. Let's now go move into the euro yen. Now here we're breaking lower. In a moment. Well, we're into some support here. I still wonder if once we get past those options expiration, if we see a little bit of a counter rally. And like I said, believe me, I'm no believer in the euro. That's the send me to the cuckoo farm if that hear that. We'll just move this a bit lower at 1759. There we go. So 1759. On the upside, we'll go with 1814. You know what? Let's move it just a little bit higher if we do see that counter reaction. Probably not going to, but just so. Well, it's right there. It's not going to make that one step. It's going to be 1820. And let's go into the euro odd. Euro's still making new lows, not at 936, 930, 936. Holy smokes. And the Aussie itself, at least versus the dollar, is basically treading water. Well, let's go and keep this low because if we do get pressured by the euro, we want to know what the risk level is on this. So trying to get too fancy and put it a little bit higher. See, this dip here would allow this stop to be taken out, and the support level is coming in just a hair under there, but nonetheless, we want to keep that. So we've got 6150, 6151. We'll call it 50. On the upside, even a snapback really, I don't even think gets you above 6250. So that's going to be 6250. And let's take a look at the Euro QB. Tell you what, it could be worse, considering how weak the euro is. So it's a bit surprising here. I'm gonna move to here. $73.43. Resistance will be right there. 74.42. I see crude oil got a nice little shot up. I just saw that now. It was at 56.19 and it rallied up to 56.60. Quiet trading. It's just been a drip since New York close. The drip lower, that is. Hang on. See, Aussie yen. We're going to go and keep the resistance, the bias chart support down here, in case we do see the Shin strengthen a bit here. So that'll stay at 72.26. The resistance, we will lower that to right there. Well, actually, you look, you can see the touches. That's where they're running out of gas too. 73.28. Now, we've given it the bullish bent. It's about to lose that actually at this point. It needs to defend today to even keep that. But actually, if you think about it, kind of lost that bent right here. I don't want to go as far as to say bearish yet until we dip. So let's just keep that the same. Let's go and take a look at the guppy. We are into some support here. Yesterday's bias chart support. The risk with the sterling, I think we'll just move this just a bit lower. And let's take a look at a fib also. See if we're not too far away. Yeah, not too far away from 38%. But we'll go with this here, which is going to be right there at 32.38. Another 40 pips lower. And on the upside, $33.61. Bear with me. Just talking to someone in the chat room. One moment. And one of the guys was commenting about the S&Ps had a pretty good, nice little rally. And we talked about that earlier when it came in that 29.85. We saw the pair dip from that in Asia, but now we've kind of come back. And let's go on in. Yeah, 33.61. And we're just here on that buy chart support. But I like this area here. Maybe pushes just a hair lower, but not much. Hang on one. $82.45. And 83.58 on the upside. And there's the bias chart. Okay, let's go move into the, let's take a look what the S&Ps are. We talked about that 25.85, and maybe it worked out best in the sense that with all the calamity with the gold, which I came out okay in, I didn't put on the position at the 29.85, but it would have ultimately done okay in Asia, and I never would leave any kind of spoof trade open if I go to sleep for good reason. But that being said, I kind of looking at this area here. $29.96, which with the futures you'd be looking at $29.97. Yeah, $29.97. If we get one more jab up here, also with the crude oil, Still wondering whether you can go in and take a dip and test this trend line here. But the market is a bit oversold. We mentioned that yesterday, is that this is really a great area for anyone to cover that have been short over the medium term. So maybe we can get one more rally. That rally may allow us to get up to around here 57.39-ish, thinking. And gold, I like selling gold if we can get a pop back up here towards this, on the futures would be 15.23. We were looking for about a $5 rally off of this low, $5 or $6, and that pretty much came to fruition. I certainly wasn't going to hang around here on that day in case the dollar did break even higher. And we are higher, but it hasn't impacted gold as much. I think most of the selling has already been done. So if we can get a rally back up into this area here, which would equate to about 15.22.23, and the December futures would be a good area. I think people would try and sell into that. Other than that, that's about it. We'll go and take a quick look on the majors. And euro still pressed a little bit low. I still think, obviously the short way is the way to go. I would just say be a little bit cautious, because once we get past the option expiration, maybe we get a counter rally as they alleviate the pressure on that, and then a better opportunity to sell it at a better price. But that's all we have. We'll see you on the FX Daily Roundup. Thanks for joining us here. Have a great day.